Hut 8 is red hot. The stock up 20% this week alone. It locked in a second 15-year lease with, again, an unnamed major tech hyperscaler. The deal worth nearly $10 billion. It also fully commercializes its 1 gigawatt Beacon Point AI campus in Texas. It is the latest sign that Hut 8's pivot from crypto to AI infrastructure is paying off for investors. Joining us now in a Power Lunch exclusive is Hut 8 CEO Asher Genoot. Asher, it's good to have you back on. We've been talking to you off and on for a year and a half. We've been talking to a lot of the companies, as Kelly now calls them, in the AI landlord. That's the new term that we've given.
Let's see if he likes that term.
Well, he may not, but you could say this if you don't. But that's kind of the name that we are giving, or Kelly is anointing to your group. Why is it this sort of gold rush right now? Is there something specific that's happening where all these deals seem to be being signed in a matter of weeks or months?
Power is the key critical resource that allows this industry to thrive. Our thesis as a company is power fuels technology, and if we build infrastructure at the intersection of power and technology, we can push humanity forward. And so I think what this deal shows is we've built credibility in the ecosystem. Tenants and customers trust us to power their AI needs and the infrastructure that powers the technologies that they build. And this is now the third deal. When we first started chatting last year, we had zero contracted AI revenue. Now we have about $27 billion of AI contracted revenue, almost $1.75 billion a year in EBITDA.
Asher, I don't know if you're in the 13 eastern states, the District of Columbia that makes up PJM, the largest electrical grid. Are you?
We have projects that we're looking at there, but nothing active right now.
I'm going to ask you anyway about this story. So the New York Times over the weekend asserts that new data centers will add $6.3 billion to electricity bills in that area. Based on the auction, we talked about this previously, that was held on June 30th, an extra $6 billion in energy bills. And they say that data centers have added $29 billion in utility costs for customers in the PJM region since 2024. Do you have any context for this? When people see these numbers, they're going to want more of what New York just did, which is a moratorium on data centers. Is this true that data centers have added this much to utility bills for 13 states in the District of Columbia?
It's not true. The key in all of the projects that we're working on is we pay for the transmission upgrades that the utility incurs. So we actually increase the infrastructure for all of the ratepayers. And we also paid for the energy bills itself. And that's Hut 8, but I think that's the majority of data center companies today, because this is a hot and important topic. And the idea is that this infrastructure is additive to communities that it enters, not adding additional costs to them. So I think on one side, it's critically important that data centers are able to help increase the infrastructure within communities that we engage in. And every conversation we have, every project that we're developing, the conversation is how much do we have to pay to increase any electrical infrastructure that may need to have to be increased, and we pay for the full bills. So that's full stop, and every data center developer that I know is doing the same thing. Separately, we also are looking at improvements on the communities themselves, right? We donated a full water infrastructure program to the parish. We lent them $10 million to increase salaries for the sheriff's department, for school district, and so forth. So I think a big part of developing data centers now is how do you make sure that this is an investment that benefits the community as well? And I think you're going to see more and more of that across projects that are being developed across the U.S.